the Chief Financial Officer and the Board of Directors and may additionally have a seat on the board. The SFO supervises the finance unit and is the chief financial spokesperson for the organization. The SFO directly assists the Chief Operating Officer on all business matters relating to budget management, cost-benefit analysis, forecasting needs, and securing of new funding. Most CFOs of large companies have finance qualifications such as a Master of Business Administration, Master of Science, SFA, or come from an accounting background such as a Certified Public Accountant. A finance department usually consists of qualified accountants such as Certified Public Accountant, Chartered Accountant, Certified Management Accountant, Chartered Certified Accountant. The federal government of the United States has incorporated more elements of business sector practices in its management approaches, including the use of the SFO position alongside, for example, an increased use of the Chief Information Officer post within public agencies. The Chief Financial Officers Act, enacted in 1990, created a Chief Financial Officer in each of 23 federal agencies. This was intended to improve the government's financial management and develop standards of financial performance and disclosure. The Office of Management and Budget holds primary responsibility for financial management, standardization and improvement. Within OMB, the Deputy Director for Management, a position established by the SFO Act, is the chief official responsible for financial management. The Office of Federal Financial Management is specifically charged with overseeing financial management matters, establishing financial management policies and requirements, and monitoring the establishment and operation of federal financial management systems. OFFM is led by a controller. The SFO Act also established the SFO Council, chaired by the OMB Deputy Director for Management and including the CFOs and Deputy CFOs of 23 federal agencies, the OFFM Controller, and the Fiscal Assistant Secretary, the head of the Office of Fiscal Service of the Department of the Treasury. Its mandate is to work collaboratively to improve financial management in the U.S. government and advise and coordinate the activities of the agencies of its members in the areas of financial management and accountability. OMB Circular A-123 defines the management responsibilities for internal financial controls in federal agencies and addressed to all federal CFOs, CIOs and program managers. The circular is a re-examination of the existing internal control requirements for federal agencies, and was initiated in light of the new internal control requirements for publicly traded companies, contained in the Sarbanes-Oxley Act of 2002. While significant progress in improving federal financial management has been made since the federal government began preparing consolidated financial statements, the Government Accountability Office reported that major impediments continue to prevent from rendering an opinion. In December 2006, the GAO announced that for the 10th consecutive year, the GAO was prevented from expressing an opinion on the consolidated financial statements of the government due to a number of material weaknesses related to financial systems, fundamental record keeping, and financial reporting. At the same time, in calendar year 2007, the CFOC announced that for the second consecutive year, every major federal agency completed its performance and accountability report just 25 days after the end of the fiscal year. The role of the SFO has evolved significantly. Traditionally being viewed as a financial gatekeeper, the role of the SFO has expanded and evolved to an advisor and a strategic partner to the CEO. In fact, in a report released by McKinsey, 88% of 164 CFOs surveyed reported that SOs expect them to be more active participants in shaping the strategy of their organizations. Half of them also indicated that SOs counted on them to challenge the company's strategy. As a result, the 1990s saw the rise of the strategic SFO, and more recently many companies have created a Chief Strategy Officer position. As a result, a 2016 survey of CFOs suggests that their new role has focused on financial reporting, with 52% of CFOs still finding themselves bogged down in the basics of traditional accounting. practices such as transaction reporting and unable to make time for business partnering. The rise of digital technologies and a focus on data analytics to support decision-making impacting almost every industry and organization will only add more pressure on CFOs to address this tension on finding the time to meet the expectations of their C-suite colleagues. Many organizations have embarked on the journey to help achieve this by creating a finance function based on 4 distinct pillars: an accounting organization structured as a shared service, an FP&A organization responsible for driving